For a long time, there have only been two real options for going public in the US.
Well, there's a new exchange in town, and they're not going to be a third copy of the same thing.
We're talking about an alternative that's leveraging state law to materially lower the cost of going public.
Welcome to the pre-read. Just like the slides you get before a big meeting, the pre-read prepares you, CFOs, and other executives for the next big thing. It's the global podcast where finance, sustainability, audit, and risk teams come together in the C-suite.
If you're making decisions at scale or need to understand the leaders who are, you're in the right place. This is the pre-read, brought to you by Workiva.
I'm Steve Soder, accounting enthusiast and Diet Coke aficionado.
And I'm Melissa Zucker, sustainability nerd and equal opportunist caffeine addict.
Today, we're diving into the new Texas Stock Exchange. Our colleague, Josh Gertsch, recently sat down with Jeff Karcher, the global managing director of the Texas Stock Exchange, to get the scoop.
So let's set the scene a little, Steve. How big of a deal is it that there's a new exchange in town?
It's a pretty big deal. I mean, time will tell on how big of a player the Texas Stock Exchange becomes, but given the fanfare and candidly, given all the attention focused to, I'd say, legacy players in the capital markets, this is a pretty big deal. It's going to be interesting to see how it plays out. Now, Alyssa, what stood out to you in Josh's conversation with Jeff?
Well, I'm probably a little biased on this one as a New Yorker, but for me, what really stood out was this shift to decentralization that really nullifies the importance of location. Right? We've had central exchanges that have existed for decades, but trading today is actually highly decentralized, with most trading taking place nowhere near the primary listed exchange. So that means that the physical location of the exchange no longer matters as much. So sorry, New York. How about you, Steve?
Well, the other thing that stood out to me, because I completely agree with your point, is that the Texas Stock Exchange is offering a partner-based relationship. And, based on how Jeff puts it, companies can expect a very partner-focused relationship with the exchange, their goal being to work inside the company to help figure out ways to make it better and, candidly, in a bid to differentiate themselves from their competitors.
All right, well, let's get into Josh's conversation with Jeff Karcher.
My name is Jeff Karcher. I am with the Texas Stock Exchange, which is headquartered in Dallas, Texas, naturally. Prior to joining the exchange here, I've spent almost a decade at the New York Stock Exchange in the Atlanta area, working with companies located throughout the southeastern United States. And prior to being in the exchange world, I spent a lot of years in the capital markets field of institutional equities.
It's not every day that a new national exchange gets approved by the SEC or hits the market. So it's pretty exciting what you're doing over there at the Texas Stock Exchange. Would you mind just kind of sharing, what the intent is, how it's supporting U.S. capital markets and kind of the need you're expecting to fill?
Sure. Quite often, I think the first question you really ask is why Texas just itself? The exchange is not being set up in Oregon or Michigan. Or other states throughout the country. And I think part of the reason why that is Texas has really gone through a renaissance over the last 20 years in corporate growth and economic growth. We're now the 8th largest economy in the world, just as the state of Texas. And at the end of the year should surpass France to be 7th. And that comes about by having 52 Fortune 500 companies here. 1 out of 10 listed companies in the country are here. Over 300 relocations of companies have occurred over the last several years. And it's really kind of built up to a point where the corporate infrastructure is just very, very large. It's very diversified too. Most people think of Texas from the outside as an oil and gas state. Well, obviously that's a key part of the economy. There's no sector that's more than 9% of any GDP of any sector. So it's very diversified too. And as a result of that, breadth and strength of the economy, the financial services market really has built up quite a bit too. And in fact, in the Dallas area, JP Morgan has more employees here than in New York. You've got Morgan Stanley moving folks here. Goldman Sachs is having their HQ2 here of over 5,000 employees coming. It just kind of seemed to reach a tipping point, I think, where you had such a large infrastructure in the state, both financial services and corporate, along with governmental support
I think most people familiar with Texans can appreciate that they have a lot of pride in their economy. And, to some extent, I think people joke that they're own country, but there's a lot of, to your point, there's a lot of validity. There's been a lot of growth, a lot of infrastructure, and they should be proud of that and excited about it. A lot of companies typically list on, there's not very many exchanges. Typically, there's kind of 2 national exchanges out there. If a company is thinking about becoming public and listing on a public exchange, or if they're thinking about maybe switching exchanges for different reasons, what differentiates the Texas Stock Exchange and would be driving them to be a consideration in listing on that public exchange?
Sure. Well, I think the last thing you need is a third copy of the same thing.
Yeah.
So we'll be bringing a number of features of innovation to the listing relationship with a corporate issuer and the exchange. Several of those components will be kind of down the road as we file them subsequently with the SEC early next year or into next year. But really, it's kind of about the philosophy about how we're going to operate. We're not going to be about pomp, circumstance, confetti, and billboards and flashy marketing programs. It's really more about the ethos of aligning ourselves with a company and their mission to be a better public company. That's the overriding concept that we have here. Because within the public world, we've seen a massive reduction in companies over the last 25 years, 45% fewer. And that's not a good thing. And I can say that even working at an exchange, being very self-serving comment, you want more companies public because in general, they employ about 1/3 more people and pay them more on average. So you do the simple math, it's better for everybody and every economy in every state. So we are going to be addressing really a lot of the pillars that have been the headwinds for companies being public. There's been excessive litigation. There's been weaponization of corporate governance. There's been the overwhelming cost of reporting, an increased number of items that need reporting. So as a result, companies just shy away from being public. I have a meeting not that long ago, and I had a chance to see the original Walmart prospectus from 1970. It wasn't even 8.5 by 11 size paper. It was that notebook size paper, and it was 8 pages.
Oh.
Right? I think we've changed.
Yeah,
So
we've come a little way since then. I would love it to be 8 pages. So
yeah, I think a lot of folks would. Not that we're going to get back to that by any means, but just the general concept, as I said, about like looking for areas to address where improvement can be had. The duopoly that's been in place really just hadn't addressed that. And so as we got started, we first started talking to one another about, well, what are the things that we can address? What are the things we can do? And so really in partnership with the state legislature, we helped author 5 different pieces of legislation in 2025, 3 of which are directly attributable to listed companies and helping them be, as I said, a better public company. They are now laws. They're not wishful thinking. They're not pie in the sky thoughts. There is now a proxy threshold rule that is in place in Texas, meeting certain requirements, which does include listing on Texas Stock Exchange, that allow for a far more commonsensical levels of thresholds for proxies to be submitted and some rules around that. There's also proxy advisor oversight. So the proxy advisor firms, when they issue a recommendation now, have to disclose if they made a recommendation that is not in the shareholders' financial best interest, they have to explain why. That's it. Just explain why. Not to say you can't take the other stance, but just explain why. It's common sense in our opinion, in our thoughts and our efforts, and that's a law now too. And then the third one is called what's simply called the business judgment rule, where that has been now strictly codified to operate within the Texas Business Court, which was established previous session, to allow for companies to be able to operate under the umbrella of if a director and officer used their business judgment in making a decision, someone could not bring a derivative lawsuit against them for that. There's a lot of legal technicalities with it. I'll just kind of leave it at that. But that may not sound like very much, but it has actually a substantial impact for a company management team in twofold. One, they don't have anybody looking over their shoulder day to day on every decision they're making as a company. There's no 24-hour later armchair quarterback coming in and messing things up if something went awry. And listen, I mean, not every decision is good. I mean, companies make bad decisions. That doesn't mean they made them with bad intent. And that's the difference between it. And so it offers some legal protections in that regard. And then as a result of that too, if you think about you have less exposure, that means you probably have less D&O insurance cost. D&O insurance can be in the millions of dollars. And so, these kind of changes are very fundamental in nature of operating as a public company, and they have an outsized impact on a company's finances too. So not only just the operating benefits for it, it just materially lower costs of being public. So that's what we've already done already. I can tell you there's already several items. We've already had pen to paper for the 2027 legislative session. So it's not done. And that's when I say that's kind of part of our ethos. That's the way we look at things.
I mean, I think everyone would appreciate like, hey, we're here to run a business. We're trying to do this sound and we're trying to do it publicly so we can give those benefits that you talked about to shareholders and employees. And to your point, everyone's better off if we can work for those types of companies. So I think, I think that's a good thing, kind of head in that direction for sure.
Yeah. And if we can just set up these parameters, these rules, these guidelines, these day-to-day operating kind of techniques, the fact of the matter is the company then, the management team has more time to focus on their company, make your wins faster, better, cheaper. And that's going to be better for the company, better for shareholders, better for the country as a whole too.
The IPO market is heating up, but favorable conditions won't last forever. With midterm elections in 2026 and shifting macro conditions, timing matters more than ever. Whether you're eyeing a traditional IPO, a direct listing, or a SPAC, the one thing you can control is your readiness. And that starts with acting like a public company before you become one. Streamlined reporting, mature internal controls, and a deal team that can move fast. Workiva is helping companies do exactly that. From drafting and filing registration statements to connecting financial reporting and SOX compliance in one platform, Workiva gives teams the infrastructure to hit the ground running. If going public is on your horizon, now's the time to prepare. Read IPO Readiness, How to Hit the Ground Running at workiva.com/PR-IPO ready. That's WORKIVA.com/PR-IPO ready.
Circling back to the Texas, this originated in Texas. You talked about the ecosystem of Texas and how it's had great growth. We obviously know it as an energy state, but, fintech, financial service, manufacturing, to your point, there's been so much growth there, and that makes sense on why it's coming out of Texas effectively. How are you thinking about kind of the broader landscape there and kind of the path forward to go beyond just the borders of Texas?
The exchange itself will be one with global ambitions. In fact, I'm going to be in London in a couple of weeks for some series of meetings in doing so, because there's a lot of appeal overseas from different countries looking to come into the U.S. And as different countries internationally look at the U.S., quite often they look at Texas as kind of the entry point for the country, because what they see is that infrastructure and that governance and the regulatory body is set to succeed. The governor and the legislature really are very, very strongly dedicated to making sure that Texas is the blueprint for America in conducting business. And there's been a lot of changes already. In fact, the whole idea of the exchange came about in 2020 when back up in New Jersey and New York, where the duopoly exists, there was a talk of having a financial transactions tax placed on every trade. Needless to say, didn't go over well with exchanges and a lot of participants. Both the heads of the exchanges came to Austin, visited with the governor, and said, "Hey, this is possibly happening. If it does, can we move our operations to Texas? We have the ability to do so." And of course, Governor Abbott, giddy up, "Yep, sure, we'll be ready for you Monday morning. Let's do it." And then cooler heads prevailed in New York and New Jersey, and it kind of went away. But after that, the governor kind of realized, hey, that's not a bad idea. What if we had an exchange here? So that's actually kind of how it started. And you would think that it's kind of over, but it's really kind of not. The trend in New York and other regions is still towards more regulation, more taxation, and looking for ways to do that. Texas is the opposite. And so from operating an exchange, there's certain advantages to doing so outside of New York. The way trading has taken place over the last 20 years and bifurcated itself so much that what people don't realize quite often is a substantial part of the trading in a given stock is done away from the primary listing exchange. I think in Tesla's case, only 9% of their stock trades on NASDAQ. So every day, 91% of what's trading in their stock is being done across 200 different venues electronically, instantaneously throughout the country. So yet that company, though, is still subject to the governance and standards out of New York. We are creating as that third alternative an optionality for something outside the scope of the trend that's been taking place in that market. I want to be very clear too. This is not about governance reductions. Governance is still very, very high. In fact, our listing standards are slightly higher than the NYSE and NASDAQ's. However, you can look at some of these rules for more earlier entrants for companies or less onerous regulations for companies. So it just provides itself as a different alternative for somebody in this region. And I think that will appeal to companies in other states, in other regions, as they do get to know about it.
To your point, kind of coming out of 2020, I'd say the one thing COVID has impressed upon everyone is like you don't need to live in a region or a market to be able to transact in it anymore. I mean, I help lead our capital markets practice over here, and it's interesting because the majority of the new IPOs are definitely in the West by far. And to your point, the deals don't run necessarily through New York anymore or through a big region like that. It's advisors and deal team members, and everyone's coming from every which way, whoever best aligns with how that company wants to transact or how they want to do those things. The nation is open to do that. So I don't really foresee any limitations there. Being the new kid on the block, I would say, capital markets hinges and dies by that confidence in, numbers and how companies tell the story and everything about them. How do you come in and be able to kind of build that confidence with all the people that work in capital markets, anything from the buyer side to the seller side, to attracting people on the exchange? Like, how do you foresee being able to do that and get people to be like, yeah, we're comfortable with listing on the Texas Stock Exchange? Like, obviously, I know there's some things that have to be tidied up before people can do that, but what will be the steps you guys will take to kind of ensure that confidence or build it with the right respective parties?
Sure. So you touched on several things there. One thing I think is very important is the decentralization of the economy. A lot of companies are all over the country, and you've seen a decentralization of finance. If you think about when innovation occurs, it's almost always decentralized. It's Zelle, it's Venmo, it's Plaid, it's Stripe, it's Ally Bank is a national bank with no branches. Those have been the trends and the changes in financial services. Exchanges are really no different in regard than just that. Because of the ubiquity in trading that takes place across so many other venues, that central point of collection of an exchange from a primary listing standpoint doesn't matter as much anymore, simply because 20 years ago, if you were listed on the NYSE, 93% or so of your stock would have been traded on that floor. Today, that is somewhere in the 10 to 12% range. So trading itself became very decentralized. The concept of where the actual exchange is really shouldn't matter at all. The technology is going to be excellent. In fact, our exchange itself, the physical exchange, it's already built. It got built 5 months ahead of schedule. It got built very quickly because of the 7 or 8 people in the world that know how to code a matching engine. We have 3 of them, and they were able to replicate what they had done earlier very, very quickly. This is a team that founded a company called Island in the mid-90s, which got bought by Instinet, which got bought by NASDAQ, which is kind of the core, the matching engine of NASDAQ today was designed by this team. That's our software engineering. So it's outstanding. It's excellent. And they've modified it a little bit. And then it's running on the fastest Dell servers that they've ever launched and made. So you put the hardware, the software together. Exchange itself will work very, very well. It's running as fast or faster and more stable as the 2 existing exchanges. And that's going to be important because to the latter part of your question, it is about showing people the proof of concept, showing the world, the trading community, the market making community that the exchange works first and foremost, trading smooth, as efficient as others. Then from there, you start to establish the listings. And so for us, it'll be a few months after trading begins, we'll begin to list our first ETF, ETP products on board. And if you think about how you open and close those ETFs, they're very equivalent to opening and closing an individual stock. So you can prove that and show the technology works, that it can be done somewhere else outside of New York, although our servers sit alongside the other servers in New Jersey. It's just the way the industry is electronically. They all kind of share the same data centers in a triangle up in that region. So the trading itself really is identical. We just happen to have a Texas name on it versus a New York name on it. And I think as that gets established and shown it works, then the credibility is there. The lack of, you don't have to have concern about the risk of transferring and something going awry. Companies transfer all the time. When I was at the NYSE, we worked towards getting companies from NASDAQ to transfer over, and vice versa. Companies would transfer from the NYSE to NASDAQ. And in all of those cases, everything transfers very seamlessly, very smoothly. There's no disruption. If there was, you would have heard about it, for one, and you wouldn't have as many companies going back and forth like they do.
One thing that has been exciting to see in 2025 is, we've seen a return to what I would call capital markets or the public markets. We've seen IPOs going forth. We've seen a lot more money raised in secondary offerings on the public exchanges. It's nice to see valuations up. It's nice to see people transact and raise capital through that means that's available to them. When you think about a private company maybe considering going public, or a public company maybe thinking about a different exchange, you already highlighted some of the differentiators that, they can consider, but any final remarks on, why they should consider making history by switching over and listing with the Texas Stock Exchange?
Well, first off, I would reinforce to all existing public companies and all private companies looking to go public, wait on that decision until late 2026. Don't you run into that would be ideal. Because that's what we'll be ready for corporate listings kind of the back half of next year. But you're right. The market the pipeline for IPOs is very, very strong. Which is, I guess part of that whole public-private debate and problem is companies just stay private much longer. There's 5,000 private companies in Texas alone that are looking for an exit of some form or fashion. Typically, more often than not, they get bought up by somebody else, and they never do go public. Part of that is financial, and part of it is strategic in those instances. And then eventually, as companies do grow, they just choose to stay private and not go public for some of the reasons I mentioned earlier. And we want to, where we can affect those changes there, that's fine. And so hopefully that will help create a better pipeline for the future for the IPOs. We certainly will create an alternative for the existing public companies to consider. We will have subsequent changes to our listings rules and programs with companies, so they're going to see a different way to interact with their exchange and what that relationship is going to be. It's going to be very partnership based, is the way we look at it, because that's the way we view working with the company. Because again, as I say, being a better public company means you really are almost inside that company, trying to figure out ways to make it better. So it will be very partnership based. It's going to be a very different look for somebody. And I've told several that, 12 months from today, the way you consider your exchange relationship will be entirely different and for the better. It still doesn't mean you're going to list with us necessarily, but the way the whole relationship is going to be viewed differently.
Yeah. And I think that's a breath of fresh air for people, and they would appreciate that. And to your point, we'd love to continue to see more companies on the public market. You highlighted so many benefits of doing it. Typically, the hindrances are cost of capital, the additional, cost burden associated with it. And then to your point, all the regulation burden that can come with it. So to the extent you can lessen that or provide relief or align more with the company's goals and where they want to go, they should be able to take advantage of that. And we're excited for it. And to your point, it may not be the exchange, but at least thinking that way and putting pressure on those things is going to move us in the right direction. I think can only be beneficial for everyone.
Thank you to our guest, Jeff Karcher, and thanks to our guest host, Josh Gertsch. And thank you for listening.
This has been The Pre-Read, brought to you by Workiva, the world's only unified platform for financial reporting, sustainability, audit, and risk.
We've got more insights and hot takes coming your way, so be sure to follow or subscribe on Apple, Spotify, YouTube, or wherever you get your edge.
If you liked the show, leave us a review, send it to someone you love, or just shout it out on your next team call.
We'll be back next week. Until then, go lead it like you mean it.
I'm Alyssa Zucker, and that's Steve Soder. Our lead producer is Mike Ravagno, with additional production support from Joseph Machinsky and Drew Hayes. Segment reporting was done by Josh Gertsch.
Claire Allison is our graphic designer. Transcripts are created and edited by Courtney Kimsey. And thanks to our digital and social team, Mike Berg, Katie Carr, and Michael Karnowski.